So I'm just going to, first thing I'm going to do is to mute everyone. Now, if you don't mind keeping yourself on mute throughout the session, that would be really handy. I know I always say this, and I also always say it's not because I don't want to hear anyone. It's because it eliminates background noise. Obviously, if I've got sort of rustling and stuff in the background, then it makes it slightly difficult for others to hear me and to hear what's going on. So if you could just make sure you are on mute on your control panel, and if you could just keep yourself there, that would be really much appreciated. So thank you very much for that. Okay, so we're going to start with the session for tonight, and I'm just going to change my screen around slightly. I've got this right, and click on that. Okay, right, so tonight is all about the trial balance. So far in the masterclass sessions, we've covered basically what accounting is, the sort of accounting equation, how it all works. We've covered about double entry, which side of the accounts we debit and which side of the accounts we credit. We've looked at T accounts as well. And if you have missed any of this stuff, which is quite integral to what we're going to do tonight, then I would advise that you go back and watch the other sessions that we've done before, because we are sort of building a bit of a story here with these, in that every session that we do, we're continuing from where we left off before, if that makes sense. So in the previous sessions, I drew up some T accounts, which are on the screen now. And we learnt which side we debit, which side we credit. We learnt all about dead click, which I will cover again in a second. Don't want to keep on repeating myself, but I think dead click is so important. So I'll have a quick recap of dead click in a second. But yeah, so in previous sessions, we've drawn up our T accounts, which is what we've got on screen now. And last session, we actually balanced them off. So as you'll see, we've got balanced accounts on the screen now, and that's what we did last session. So if you did miss any of that, and if you'd sort of like to see that again, then they're all on the YouTube channel if you want to sort of watch them again. And tonight's session, as always, is being recorded. So if you do want to sort of catch up on the previous ones and then watch this one again just to see how it all slots in together, then I would definitely recommend you do that. So yeah, so tonight's session, although it's probably not going to be as long as the usual sessions, probably aiming for about sort of 25-30 minutes tonight. There's obviously only a limited amount I can say and show you about the trial balance, but hopefully by the end of it you'll have seen how it all works, and how dead click we can also apply to the trial balance as well. And we're going to draw up a very simple trial balance based on the T accounts that we've got on the screen. Now, I would say that the T accounts we've got on the screen and the T accounts that we've been working on the last few sessions are all balance sheet accounts. So they're either assets, capital, or liability. So I haven't introduced any profit and loss accounts into the equation at the moment. And that was deliberate. I wanted to keep this as simple as I could, just to make sure you sort of grasp the concepts. And next session, which is on the 16th of March, will be actually the P&L account. So that's when things will get a little bit more technical. So what I intend to do on the next session is to start with a different trial balance, because obviously the trial balance I've got now, or the trial balance I'll end up with tonight, is just balance sheet accounts. So we'll almost start afresh on the 16th of March with a brand new trial balance that contains profit and loss accounts and balance sheet accounts. And in the first of the next two sessions will be the profit and loss account, and I'll show you how to build the profit and loss account from the trial balance. And the session after that will be focusing on the balance sheet. So I'll use the same trial balance that I used for the profit and loss account session for the balance sheet session. Not easy to say. So by the end of the next two sessions, you should see how to draw up a profit and loss account and a balance sheet from a trial balance. So I can't really use the trial balance that I'm going to show you tonight because it's too simplistic, and I need to have P&L accounts in the trial balance that I demonstrate for next session. So hopefully that makes sense. So what I'm trying to say is tonight's session is the final session in which I'll use the T accounts you see on the screen, and in the next session the P&L account will start afresh with a more complicated trial balance, but obviously I will try and make it as uncomplicated as I can. So anyway, so that's the next session, the profit and loss account, which will be the 16th of March. But for now, we're going to concentrate on a very, very simple trial balance and just the concept of the trial balance, what it is and how it works, etc., etc. So hopefully that all makes sense. So what is a trial balance? So a trial balance in its most simplistic form is a list of balances at the end of an accounting period. Now usually a trial balance is taken at the end of an accounting year. So no doubt if you've worked in bookkeeping or accounts before, the first stage in building a set of accounts is to get the trial balance. And the trial balance will usually cover a period of a year, of 12 months. But it's very important that we remember that we never say a trial balance for the period covering or for the period ending. Now the reason we don't say that is because trial balances contain balance sheet accounts, and balance sheet accounts are always as at. So you'll see, if I just click here, you'll see I've got trial balance and I've got as at, because a trial balance is like a snapshot of your figures, of the figures of the accounts at a certain point in time. Now that certain point in time, as I say, is usually at the end of an accounting year. So all your profit and loss accounts will be those covering a 12-month trading period. But the balance sheet accounts will be the balances as at, for example, let's say it's the end of a calendar year, 31st of December. So your balance sheet will always be as at the 31st of December. And it therefore follows that the trial balance, which is what we use to get to those figures, also needs to be as at as well. So it's only a small point, but you just remember that when you're preparing a trial balance, you always use as at, you don't use for the period ending. So hopefully that makes sense. So I'm just going to go back through and talk about dead click for a couple of minutes, just to sort of recap really on what we've said about dead click before and how important I think it is for remembering double entry, and how we can also use it to help us when we're preparing our trial balance. So you'll see that I've kept the same spreadsheet that I've been using for the last few sessions. So all I've done tonight is literally add some columns on here, added debit and credit, ready to build our trial balance, which we'll start doing shortly. But just to scroll back to the top of the screen and just to focus on dead click for a second. So dead click means, just like it says here, the D of dead, or that sounds terribly morbid, but the D of dead is for debit and the C of click is for credit. So these accounts here, which are expenses, assets and drawings, come under the debit category, and liabilities, income and capital come under the credit category. But as I've said before, and I can't really emphasize enough, it's important to remember that when you're building up your T accounts, dead click applies when you increase the value of your accounts. And just as important to remember that as it is to remember the concept of dead click itself. Whenever you're increasing expenses, assets or drawings, you debit the T account. And if you're increasing liabilities, income and capital, you credit the T account. Now, I always say that because it's quite important, because there are certain categories here that can be decreased as well. So for example, if we're talking about the asset of a bank account, for example, the bank account is an asset if it has money in, but also it can be a liability if it's an overdraft, for example. So you must remember in certain circumstances that you can increase and decrease the value of these accounts. That's what I'm trying to say. And dead click only applies when you're increasing the value of all these accounts here. So I've gone into a lot more detail on that subject in the past few sessions, so I won't dwell on that too much, but I just think it's important to sort of refresh your memory that whilst using dead click, and it's a great way to remember how to treat your T accounts, you must remember that you're always increasing them when you apply the concept of dead click. So if you're decreasing your T account, you always take the opposite of dead click. But as I say, I don't want to confuse you too much now, and if you need any more explanation on that, then you can see the previous sessions that we've done on that subject. But it's also handy to remember, dead click is also useful when we're preparing the trial balance, which I will come to in a second. So I've briefly explained what a trial balance is. Now, trial balance is actually something you'll maybe come across if let's say you're applying for jobs or something like that. You'll quite often see if there's a job advert for a bookkeeper or an accounts assistant or whatever, then a prerequisite for that quite often is that you can prepare accounts to trial balance. So what I'm showing you tonight is quite relevant, and if you can prepare accounts to trial balance, then you're sort of halfway there to preparing accounts, really. And a lot of companies, when they're looking for bookkeepers or looking for accounts assistants, they will say that they want accounts prepared to trial balance. So that basically means doing everything that we've done so far and preparing the trial balance, which we're going to do tonight. Now, I guess a lot of the time, when it's requested that you prepare accounts to trial balance, then you would obviously use computer software. So you just literally pull the trial balance off of something like Xero or QuickBooks or something like that. But I also always feel that it's important to know how to do it manually as well. And it's also important when you're, for example, pulling a trial balance off of accounting software. It's important to understand it, and I think that's the key, really. When you see your trial balance in front of you from the software, it's just nice to be able to understand what the assets are, what the liabilities are, what the capital accounts are, whether the accounts should be debit or credit, and if they're not what they should be. If they're looking unusual, then you can sort of look into it a bit more. But I just think manually understanding the trial balance gives you a lot more scope when you're preparing figures from computer software, and it gives you a lot more understanding of it, I think, if you're able to sort of work it out manually as well. Hopefully that makes sense. So trial balance periods, I've got that in my notes, which I have explained about. So we always remember that the trial balance is as at, always. So what we're going to do then is just briefly, we're going to work through the accounts that I've drawn up before. There's not many here, so it's not going to take a huge amount of time, but I will take it slowly, as I always do, and show you whereabouts on the trial balance all these different figures go. So what we're going to end up with is a list of balances on our trial balance. We'll have a list of debit balances, and we'll have a list of credit balances, and fingers crossed that they both equal the same. That is the aim. I will be staying here tonight until they agree. So the first account we've got is an asset account. As I said, all these accounts on screen, all these T accounts are balance sheet accounts. There are no profit and loss accounts here. Profit and loss accounts we'll move on to next time. So the first account we've got is the bank account. Now that's an asset, as you can see, and we've already done the balancing of all these T accounts, and you can see here that I've got a balance carried down of 25,600, and then underneath our line, we can see that both columns agree. Underneath, we've got a balance brought down of 25,600. So the balance brought down of 25,600 is our balance as at the start of the next accounting period. So it therefore follows it's got to be the balance at the end of the previous accounting period. And we can see that it's a debit balance. And we can kind of check, we can make sure that that does agree. We've got these figures here, so these are the figures that have come into the account. So we've debited the bank account because it's an asset. We can see that there on our dead click chart. So if we add those three up, they come to 60,600, my screen tells me. And before carrying the balance down, those two come to 35,000 exactly. So we've got a balance of 25,600 left in the account because we've got more money come in than what's gone out. So it stands to reason we're going to have a debit balance in the account at the end of the period. And that's what shows here. That's what's been brought down. So the first day of our new period, also being the last day of our old period, we have £25,600 as a debit balance in our account. So what we're going to do is I'm going to move down to the trial balance, and I'm going to put our first heading in here, which is bank. So as I've just said, it's a debit balance, which we can see there. It's a debit balance because we've got £25,600 in our bank account as an asset. So I'm going to put 25,600 in there, just like that. So what I'll mention just now, I said to you just now how dead click can actually help us draw our trial balance up. Now the reason that it can help us draw our trial balance up is because the figures in our trial balance should, most of the time, not all of the time, but most of the time, you can use the dead click table as a guide to where the figures should be on the trial balance. So for example, the bank account, although it can be a bit of a grey area because sometimes it's in debit and sometimes it's in credit, if it's a bank account with cash in, it's always a debit balance. There's always a debit balance if there's cash in the bank account. So you can see under our debit table, we've got assets, and that's what the bank account is. and so therefore it is in the debit column. Now this logic doesn't always flow, but 99% of the time it will. So what I'm basically trying to say is everything in those three boxes there, expenses, assets and drawings, should be debit balances. Everything in liabilities, income and capital should be credit balances. Now, as I say, don't set that in stone. Don't take that as read and automatically assume that that applies to every single figure in the trial balance as I've just explained it, because it doesn't. There are certain circumstances, for example, where you can have a liability account that is actually a debit balance. I'm not going to go into why now because I just don't want to add to confusion, but all I would say is when you're drawing your trial balance up, as a rule of thumb, the figures in your trial balance should follow the dead click table. But what we'll do as we continue drawing the trial balance up, we will just check that as we go along just to sort of prove the logic works. So although it's good logic to follow, it won't work 100% of the time, but it will work most of the time. So we've done the bank account, we've got our debit balance in there. Our next account is B. Blake. Now B. Blake is our proprietor, and this is B. Blake's capital account. So we're going to put the account heading in here, B. Blake, like so. And we've got the balance brought down. So I'm not going to go through on every single account how it works. Hopefully you've got the gist of how it works by now. But you can see the only entry in our T account is that entry there. It's a credit balance of 60,000. So we've carried it down, so it stands to reason that the balance brought down is also a credit balance of 60,000 because no other transactions have happened in the period. So we've got a credit balance in B. Blake's capital account of 60,000. So we're going to move to our credit column and we're going to put 60,000 in there. I don't know if you can see, I don't know if it's come through or not as I'm typing these figures, but another really quick tip which I always give in these sessions, but it's a really useful thing, is when you're working on spreadsheets is to use the equal sign before you type any numerical entries into the spreadsheet. And the reason I say that is because if you put equals before you type any number in, you can add to that number without having to sort of work the calculations out manually. So in other words, you could type equals 60,000 and then type plus 20,000 minus 10,000. So you can actually type the formula into the spreadsheet cell rather than having to work these things out manually. So it's something, I guess for me, it's something that I've always done. Every time I work on a spreadsheet now, before I enter a number in the spreadsheet, I always type the equal sign first. I guess it's a habit now, but it's a good habit to get into. Okay, so we've got B. Blake's capital account there. So the next thing on our list is the shop. So if you remember back a few sessions ago when we were doing these T accounts, shop was purchased for £32,000. So we're going to go to that cell there and we're going to type in shop. Okay, so as we can see, we've got a debit balance on the account of 32,000. That's the only transaction that's happened in that period. So we've carried down 32,000 to there. So we've got a debit balance on the trial balance now of £32,000. So we're going to type that in as well, like so. So we can just quickly go back to the dead click logic and see if this is working. So I've said about the bank account earlier on. We've got the B. Blake capital account now, which is a credit balance. And as you can see there, capital comes under credit. And we've got the shop, which is an asset, as a debit balance. And if we can see above here, we've got assets under debit. So as you can see, the logic of the figures in the trial balance should follow the dead click table most of the time. So next, we've done our shop. So next we're going to have inventory, which is another word for stock. So it's another asset account. So I'm going to type inventory in here like so. And let's have a little look at our account here. So it looks like we've purchased £7,000 worth of inventory there, and we've sold effectively £1,000 worth. So we can work that out in our heads. We've bought 7,000, we've sold 1,000, so we've got £6,000 left. And as you can see, that follows. So we've brought down a balance, a debit balance of £6,000 for inventory. So then we're going to move back up to our trial balance and we're going to say equals 6,000 in there. Okay, so once again, following the dead click logic, inventory is an asset account. In here it's debit and asset is a debit. So that again follows. So next, okay, we've got something slightly different this time. We've got an account for D Smith. Now D Smith is a liability. So as you can see there, our £7,000 worth of inventory that we've previously purchased, we purchased from D Smith on credit. So there's the invoice for the inventory that we purchased. Now it looks like we've already paid £3,000 of that 7,000. So that would dictate that there's £4,000 left for us to pay. So we're going to go back to our trial balance. We're going to type in D Smith. And we can just double check, scroll back down there. We've still got £4,000 owing to D Smith there, which is a credit balance. So there it is there. So I'm going to go back to the trial balance and we're going to credit column 4,000. And again, the dead click logic. D Smith's a liability account. A liability is a credit. So that follows once again. So one more account that we're going to need to put into our trial balance, which is J Brown. So J Brown is an asset. J Brown owes us money, a debtor, if you like. So J Brown has bought £600 worth of our goods and has paid £200 for them so far. So J Brown still owes us £400, as you can see. So we've got a balance brought down here, which is on the debit side of 400. So we're going to go back, move back up to the trial balance, and we're going to say J Brown, and we're going to say a debit balance of £400. So as you can see, that's just about it. We've got no more accounts to do. So we've now effectively finished. So this is where we check that the figures agree. So I'm going to cheat here slightly, and I'm going to highlight the cells in the spreadsheet. And it tells me down on the bottom of the screen here that that equals 64,000. So our debit column equals 64,000. And I don't even need my calculator to work out that this column also totals 64,000. We've got 60 and a 4, so 64,000 in there as well. Hey presto, our trial balance agrees, and that's what we need to arrive at. The trial balance always needs to agree. Now sometimes, very, very rarely, hopefully your trial balance won't agree, and I've seen this happen a few times. It does happen in real life a few times as well. And in that circumstance, what we would probably do is create a suspense account for the difference to make it balance, and deal with the suspense account from there. But that is a subject for another day. That's another masterclass that's due to come very, very soon. But in the meantime, we'll be happy that our trial balance does agree. So the debit column equals 64,000 and the credit column equals 64,000. So just to sort of refresh once again, just to make sure that I've got across how the sort of logic works here. As I said, the logic that I'm speaking about doesn't work 100% of the time, but 99% of the time it will. So 99% of the time in your trial balance, if you've got any of these accounts, they will usually be a debit. If you've got any of these accounts, they will usually be a credit. So that gives you something to work from. It's a real good base point for you. So we've got the bank account, which is a debit, which is an asset, which follows. We've got the B Blake's a credit. Sorry, B Blake is a capital account, which is a credit. We've got the shop, which is an asset, which is a debit. That agrees. We've got inventory, which is also an asset, which is a debit. We've got D Smith, who we owe money to, so that's a liability. It's a credit. And finally, we've got J Brown, who owes us money. J Brown is a debtor to the business, which is an asset, which is also a debit. So I think it's just good logic to remember there that 99% of the time, dead click should also apply to your trial balance as well. So that's basically really all we can do on the trial balance for now. So hopefully that's helped you guys, and hopefully it sort of demonstrated how the trial balance works and how we pick it up from the T accounts. I think that's the key thing. And I think one of the things that people do slip up on is looking at the T accounts and transferring them to the trial balance, just making sure they have them on the right side. I know some people in the past, certainly some students were doing it when I was studying, that they would see, for example, on the credit account, credit T account, a balance carried down there on the debit side, and they would enter it as a debit on the trial balance. Obviously, that's not correct, and I have seen students sort of slip up on that. You have to remember where the original entry is. So if you've got a T account which has just got one entry like this one has, it's pretty easy to remember because it's the only entry there on the capital side. So logic would have to dictate that in the figure in the trial balance has to also be a credit, because the T account is a credit. So just be careful with the balance carried down and the balance brought down. What you have to remember is the balance brought down, let's say it's the start of a new period, so it therefore has to be exactly the same figure as the end of the previous period. So the balance brought down is the one that always tallies to the side of the trial balance. So hopefully that makes sense for everyone. Hopefully I've demonstrated that quite well. And so what we're going to do next time, as I say, this is going to be the end of using this as a demonstration. So we've kind of we've gone as far as we can with this demonstration now. We've drawn up the T accounts, we've drawn up the transactions, we've discovered, I should say, which account should be debited and which should be credited. We've carried the balances down, and now we've drawn up a trial balance from it. And although it is very, very, very simplistic, the TB that we've just drawn up, hopefully it will help you when you're sort of trying to learn how the trial balance works. So at its most simplistic format, I'm almost guarantee in real life you'll never see a trial balance as simple as that, but I'm trying to make it as simple as I can so that I can get the point across on how it's done. Now, I just had a question from Tony. Tony said, when will this appear on the YouTube channel? It will either be later on this evening, Tony, or it will be in the morning. So in either way, by this time tomorrow, it will definitely be on the YouTube channel. So, okay. So, yeah, so hopefully that's helped. Hopefully you've all learned a bit more tonight. So the next session is going to be on the 16th of March. And so what we're going to do then, we're going to start with a completely fresh trial balance, but it's going to be a slightly more complicated trial balance. So I'm probably going to do it in spreadsheet format again. That seems to work quite well. So what I'll do is beforehand, before the next session starts, I will draw up a trial balance that does agree. So that will be a good start. And what we will do is we will take the profit and loss figures from that trial balance, and we will make our profit and loss account up. When I say make it up, I don't mean make it up out of thin air. What I mean is we'll compile our profit and loss account from the trial balance that I provide. And that trial balance will stay there for the following session, and the following session we'll compile the balance sheet from that. So by the time the next two sessions are over, you should be hopefully quite fluent in being able to draw up a profit and loss account and a balance sheet from a trial balance. That's what we're aiming for anyway. And the sessions after that, we're going to cover lots of other different things. Lots of things like depreciation and suspense accounts and accruals and prepayments, all the sort of fiddly things, the fiddly adjustments. But before we get to all the fiddly adjustments, we're going to have a nice simple profit and loss account and balance sheet, so we can get to that stage. We can get you guys to be drawing your profit and loss and balance sheet account up, understanding how to do it, and then after that we'll move on to sort of the more fiddly stuff, as I call it. So Katrina says, would there be likely a trick question in the exam which shows, for example, bank account overdrawn? May well be, Katrina, there may well be. You just have to, something you have to look out for. You just have to remember that if your bank account has got money in it, then it's going to be a debit balance. And if your bank account is overdrawn, it's going to be a credit balance. Hopefully they wouldn't be too sneaky not to use the word overdraft. I would hope they would use it in a question to try and not sort of trip you up. But as long as you remember that if you've got money there, it's a debit. And if you owe money, in other words, if it's an overdraft and it's a credit, then you should be okay. So Sharon says to me, D. Smith, are they a creditor? Absolutely right, Sharon. They are definitely a creditor. So we owe £4,000 to D. Smith. D. Smith's a liability. So yeah, creditor is a liability, which, as you'll see here, is normally a credit balance. But yeah, absolutely. So I'll just quickly run through again. The bank account's pretty obvious what it is. It's debit balance, so there's money there. B. Blake is the proprietor of the business. That's his capital account. The shop is an asset. The inventory is an asset. D. Smith is indeed a creditor. D. Smith is a liability because we owe money to D. Smith. And J. Brown is a debtor. It's a debit balance, and it's a debtor of the business, so it's an asset. So okay, hopefully that does help. Okay then, so bang on half an hour, which is about what I thought. So okay, so hopefully that's helped. That's the trial balance. I'll move back to the top of the screen now, and I'm now going to I'm going to switch the screen and the microphone off for now, but I am going to be around. So if you've got any questions at all on trial balances or anything at all we've covered tonight or in the previous sessions, then I'll be here if you want to type any questions into the chat box at all for the next sort of 20 minutes or so. But other than that, I'll say thank you very much once again for attending. We'll put this on the YouTube channel as soon as we can. And I look forward to seeing you again on the 16th of March, where we'll be looking at profit and loss accounts. Thank you all. See you all soon.